Good morning, students. Namaskar, Sat Sri Akal. I hope you all are doing well and studying very hard for your goal, which is to be a chartered accountant as soon as possible. So, I am C. Ankit Sharma, your income tax faculty. This is our last session with you. So, we were discussing technical income from house property from our last session. Today is the last session for income from house property and mine last session also. And in the last session, we discussed about generally the theoretical provision for income from house property, in which we discussed charging section 22, which says when an income will be taxable under the head income from house property. And then we discussed about the concept of deemed owner. Then we moved on to some pre-construction period interest calculation and current year interest calculation. And then we completed case number A and B, which was for two self-occupied or unoccupied property, the treatment was as per case number A or B. In which case A says or B says that you should take annual value nil, and out of that annual value, only interest can be deducted. There will be two kinds of interest. One will be current year interest and other will be 1/5 of pre-construction period interest. The aggregate of deduction for both two houses regarding the interest provision cannot exceed 30,000 or 2 lakh as the case may be in different situations. So if loan is taken before 1499, it will be 30,000. But if loan is taken on or after 1499, then the deduction can be extended up to 2 lakh rupees if the house is completed from the end of the financial year in which loan has been taken within 5 years. And if the house is completed after 5 years, then of course deduction amount will be maximum 30,000 rupees for both the houses. I have also given you a question to solve regarding the interest provision. And I believe most of you must have solved it. So let's see who have solved it. And I asked you that please send me the answer. That this was the question I was talking about. So the calculation of current year interest and pre-construction period interest, I have shared you with a question which was in notes, and this was the question. If loan taken on 1st April 2019 of rupees 10 lakh at 10% and house property completed on 11th February 2023, calculate PPI and current year interest if three condition was there and each condition should have two answers. That is, what should be the current year interest and what should be the 1/5 of pre-construction period interest. Let's see how many of you done it. To whomsoever who have completed this question, kindly send me the answer. And answer should be like this. First point, A point, current year interest and 1/5 of PPI. Then B point answer, current year interest and 1/5 of PPI. And C point answer, current year and 1/5 of PPI. Okay, so let me see who have already solved it and let's verify the correct answer. So before starting, there is a good morning session. Okay, good morning, Manisha Ben, Mrs. Manisha Ben Panchal, Dhyanesh, good morning, very good morning. Dhyanesh is again saying something. Sir, I have question in illustration 8. Why employee contribution not taken for computation of gross total salary? Know that it has deduction section. Illustration number 8 in salary, I guess you are asking. Let me see the page number of that illustration number 8. Okay, page number 4.41. Mr. B is working in XYZ Limited and is given the details of his income for so and so. And your question is, why employees contribution not taken for computation of gross salary? Dhyanesh, when we discuss about this topic, I already told that the contribution of employee will not form part of gross salary of employee because it has already been included in the basic salary like this. If Mr. A and Mr. B is the employee and A is paying 1 lakh rupees per month as salary and 10% has been deducted as employee contribution. Now, I already explained in that class that in this case, Mr. Employee will receive practically 90,000 and 10,000 out of this 1 lakh will go to provident fund account. But when we will take basic salary, in this example, we will take full 1 lakh rupees. So this 10,000 has been already included in the basic salary calculation because the basic salary definition is due or received, whichever is higher or earlier. So in example, salary is due 1 lakh, whether it's received 90,000, 80,000, irrelevant, the salary is going to be taxable this much amount. If we are going to taxable this amount again, that it will be double taxation. So it's not possible. I already explained this thing in that class also. Okay, Anand, good morning. Aman, good morning. Nikita, good morning. Everybody have a good morning. Miss Sapna, good morning. Sankaran, Jyoti, Pradeep Kumar, Anand again, Manisha Ban, good morning. Jash Shah, good morning, sir. Attempts for the question you gave last time, and the answer is PPI deduction is 60,000. Current year is 1 lakh. Answer A, okay. Second answer has been given PPI deduction 466667. Current year is 0. PPI deduction is 60,000 and current year is 1 lakh for C case. Very well done, Jashta. Congratulations. High five from Wi-Fi. Correct answer. Very good. Well done, solved. Good morning, good morning, good morning, Murtuza, Jay Shankar, Alok, Arun, Sameer, Khushi. Everybody have a very good morning. GR Kanakarani is also good morning. Good morning. Next is saying Harshit Jaiswal. Harshit is asking, good morning, sir. मुझे person having right in a property for a period not less than 12 year का exception नहीं समझ आ रहा है, तो हम समझा देते हैं आपको exception क्या कहता है. Let's see. I already uploaded a chart diagram for these house property provision. You can download it from the portal. I uploaded it yesterday, I guess, evening. Fine. So Mr. Harshit is asking about the exception. So let's see the exception. Okay, this is the exception he's talking about regarding the deemed owner definition, point number 6. The provision was if there was a lease for 12 years or more, then the lessee will be treated as deemed owner. Clear? So what will be the impact of it? That if lessee is going to sublet that house property, then the rent received by the lessee is going to be taxable in his income from house property because he or she will be treated as deemed owner. Now, exception says that this 12 years concept will not be applicable. Even you are having a house property for more than 12 years, you will not be treated as a deemed owner if, in case the person acquiring any rights by way of lease from month to month or for a period not exceeding 1 year, such person will not be deemed to be the owner. It says, like I have given some property to someone on lease, but the agreement says that after every 11 months or after every 10 months, the contract need to be renewed. And after every 10-month contract renewal, even he has the property for next 20 years. Like we have renewed the agreement and he is in this property for more than 12 years. But in this case, deemed owner applicability will not be there. So if there is a lease period which is going to be renewed after 1 year, then after 12 years, you will be treated as a deemed owner. But if the lease agreement is renewing from month to month basis, not for a period exceeding 1 year. So if lease agreement is going to be renewed, but not after 12 months, it's going to be renewed after 11 months or 10 months. In this case, even if you reside in that property for next 100 years, even you will not be treated as deemed owner. Okay. Okay, so answers are coming. Harshit Agarwal is saying A, B, C, 3 lakh, 2, 3, 3, 3, 3 something, and 3 lakh. So you are giving the answer of PPI. Good. Total PPI. Good morning. Good morning, Sunil. Pranav, good morning. Jyoti Jhais, good morning. Great morning. Very great morning, Mr. Patel. Practical question number 5. We will discuss all the practical questions of house property one by one. Let me complete the numerical topic. Then we will be able to actually understand the practical question from study, and we will also do some MCQ which I have framed for you. Okay. Current year is 1 lakh. Good. Well done. Please answer my doubt with What doubt you have, Miss Jyoti? I have doubt in question 3. Why take motorcycle 4 months in salary? Okay, salary doubt I will take after 30-40 minutes. Fine. So till that, just be with me with these provisions. I will discuss all the doubts of salary and house property as well. Let me complete the house property provision. So we will have enough time to discuss our problem. House property is not much left actually. The cases we have already done A and B. Now 5 cases left. And let me tell you, they are very simple. Very, very, very simple. So I guess in 1.5 hours, we'll able to complete the whole house property chapter. Then in the remaining time, we will definitely going to discuss the problem of house property as well as salary. Just stay with me. Have patience. I will solve each and everything. Okay. Jyoti, I will answer it out. Okay. After 30-40 minutes, ask me again that doubt. I will come upon it. Otherwise, maybe we'll have not much time for the house property provision to be completed. So let me complete the house property provision first. Okay. Okay, Miss GR. Actually, your name is coming on my portal is like combined. So Kanaka Harini. Okay. So I'm so sorry. Kanaka Harini. Your name is now Kanaka Harini. Okay. Got it. Practical question number 5 salary. Please ask me salary question when I'll say you that now you can ask me. So do not send your salary query right now. Let me complete the house property provision. And I'll tell you that yes, now ask me the salary queries. At that time, you can ask. Okay. Good morning. Miss Priyanka is saying sorry for joining late, sir, but there was network issue. No issue. It's better late than never. Okay. So, good morning session have been done. And the answer for our practical problem, let me tell you, I'll upload the correct answer solution on the portal today. But till that, let me tell you what is the correct answer so you can verify if you have reached that answer. Part A, current year interest will be 1 lakh. And 1/5 of PPI, if you calculate, that will become 60,000. Total pre-construction period will become almost 3 years. So total PPI interest will be 3 lakh. But we need to take 1/5. So 1/5 is 60,000 in case of A. For B case, there will be no current year interest as loan has been repaid before our previous year. So no loan is outstanding in previous year 22-23. So there will be no current year interest. But PPI interest will be in this case 1/5 is 33333. Okay. That will be your pre-construction period interest, 1/5. Total will be 23333 something, and this will be your current year 1/5 of pre-construction period interest. In third case, current year interest will be 1 lakh, and 1/5 of PPI will be again 60,000. So I'll send the complete solution on the portal today, so you can see it if you have any doubt in this. Okay, continuing with our provisions and our way of study. So this is today's quote for you, and we all know who is he. Of course, Steve Jobs. Focus and simplicity. Once you get there, you can move mountains. So if you have focus and just be simple. To complete Chartered Accountant course, it's a very simple thing. You need to just work hard with a proper planning. So if you can work hard with a proper planning, I believe every one of you can complete this course very, very, very early. As I was a very below average student of my time. I am actually technically was a very below average student of my time. So if I can complete this course so easily, so I guess you all can do this. And I actually did the same thing. All time I focused on my studies. I trust that there should be a proper plan. We have to complete our course. We have to at least revise each subject at least twice. This is true. When I say this revise twice, that's my advice to make you wise. That's technically true. That's a slogan I have made for myself. So that's actually work. If you revise any subject twice, then definitely you will have a lot of knowledge regarding that subject. And I trust that you will feel that that subject or any subject is not difficult. if you are able to revise each subject twice. Okay. So let's move on to our notes part. Different cases we were discussing. We discussed case number A and B, that was self-occupied and unoccupied. So if you have two houses which are self-occupied or unoccupied during the previous year, then the annual value of these houses will be taken as nil. Is 10 reduction, automatically it will be nil. Reduction regarding current year interest or 1/5 of PPI in aggregate for both houses can be maximum 30,000 and 2 lakh. When it can be 30,000 or 2 lakh, we already discussed it. Okay. So number case number A and B theoretical provision, you can read it from over here, but I have already discussed with you. Now, these were the condition when your interest can be up to rupees 2 lakh if loan is taken from 1,499 and thereafter construction of house is completed within 5 years from the end of the previous year in which the capital is borrowed. Moving on to case number C. Case number C is a multiple houses case. Multiple houses means when you have more than two house property. When you have more than two house property. So technically, case number C is not a solution case. It's just a selection case. If you have multiple property, if you have more than two properties, or you have two properties having different cases, if they both do not self-occupied, if they both do not unoccupied, so if there is multiple cases, then case number C will be applicable. So it technically say when you have multiple houses or you have multiple cases, then case number C is just a selection case. For example, if there is Mr. Batman who is having multiple houses. So C is not a solution case technically. C technically guide you that if you have multiple cases, then where these cases should be transferred to solve. So Mr. C is a very rich person. You can see that he has 8 houses. So if you have multiple houses, then case number C will come into the force, or you have multiple cases, then also case number C will be applicable. For example, if I am saying that this house is self-occupied, this house is unoccupied, like vacant, okay? And this is let out. This is also self-occupied. This is using for his own business. Own business, okay? This is again let out. This is unoccupied. This house used for own business. Now the provision case number C comes into the force just to tell you that which house is going to be solved by which means. For example, those houses are let out. Those houses are let out. This one and this one. Let out house is going to be solved as per case number D, E, F or G. Which case will be applicable? It will depend upon different situation as the case may be. But that is going to be solved. All let out houses going to be solved either as per case number D, E, F or G. It's not 40, it's let out. Okay. Now the houses, those are self-occupied or unoccupied. We have total. This is also self-occupied. This is unoccupied. We have total 4 houses. Those are self-occupied or unoccupied. Now we can only transfer 2 houses in case number A or B. So 2 houses will go in case number A or B. Self-occupied or unoccupied is going to be solved as per case number or B, and that can be maximum 2. Remaining self-occupied, which is technically in our case 2, because he has 4 houses which were self-occupied or unoccupied. 1, 2, 3, and 4. So Mr. Batman was 4 houses which were technically self-occupied or unoccupied. Out of those 4 self-occupied or unoccupied properties, 2 is going to be sold as per case A or B. The remaining, those are self-occupied or unoccupied. We call them deemed to be let out. Deemed to be let out. So if you are having more than 2 house property using for your self-occupied purpose or they are unoccupied, then income tax will treat them as deemed let out and going to be sold as per case number D. So all deemed let out property is going to be sold as per case number D. So 2 out of these 4 self-occupied property is going to be sold as case A or B, and remaining 2 will be treated as deemed to be let out and need to be taxable as per case number D. So now we have done this 1, 2, 3, 4, all let out and self-occupied has been discussed. Then those are using for own business. We have already discussed in our last session. Charging section 22 says there must be a building. Assessee should be the owner or deemed owner, and it should not be used as for his own business or profession. If it is using for his own business profession, then the treatment will be under PGBP head. That means you can claim depreciation on it, etc. But you cannot have any treatment under income from house property. So technically, C case says that if you have multiple cases or you have multiple houses, then C will come and decide that you will go over there, you is going to be solved like that. So C do not have any solution method. This is technically a selection method. Let me clear one thing also, that there is no case A, B, C, D, E, F, G in your act. I have just made these cases to make you understand more easily, because under the house property question, it is maximum difficult that you should understand how I am going to solve it, because there are multiple kind of cases which technically confuse the students. So I have just made cases to make you feel easy that if there is a question and if you find that this question is going to be solved as per case number A or B or C or D or E or F or G, then that is going to be solved very easily. The problem in house property that students got confused that if this scenario happened, then how I am going to solve it. So when you will see that we will discuss all 7 cases, then you will able to understand why I made these cases, because technically these are technically going to help you to solve each and every question very easily. So now I have explained case A or B. So when there is one house property which is self-occupied or unoccupied, or there may be maximum 2 house property, those are self-occupied and unoccupied. So you know now how I am going to solve it as per case or B, both have same solution. So now if there are multiple cases, then now you can decide 2 house properties, if they are self-occupied or unoccupied, going to be solved as per case or B. We know how we solve case A and B. And the remaining house property are going to be solved as either let out or deemed let out. And if there is any property which is for own business, just skip it to the PGBP head. We do not need to do anything under income from house property. Okay. So we have done case A, case B, and now moving on to our case C, also discussed, because technically it's not a solution case, it's just a selection case. Now moving on to our next case, that is case number D. You might be seeing that the format was house property says the first point, calculate gross annual value. And we did not calculate gross annual value yet. Because in case A and B, there is no need to calculate gross annual value, because provision says that annual value will be treated nil. So if annual value is nil, then automatically we need not to calculate gross annual value. Case C was not a solution case, it was just a selection case. So there was no need to calculate gross annual value. Now the gross annual value concept will come into the force from case number D. So what I'm doing, case A and B, we have already done. We know the solution process. The annual value will be directly nil. Standard deduction, that is going to be nil, of course, 30% one. We just need to deduct the current year interest and 1/5 of PPI. We already know how to calculate them. The maximum limit of this will be the amount or 30,000 or 2 lakh. Maximum as the case may be. So there will be always loss if there is interest under case number A and B arise. Fine. Case number C, we have discussed, there is nothing. If you have multiple cases or if you have multiple houses, then case C will tell which house need to be solved by which method. Okay. Now the D case is very, very important. Now we will start calculating gross annual value. First of all, we need to understand when D case will be applicable. When in a question, we will apply case number D provision. So case D says, if you have a house property which is let out, listen carefully. If you have a house property, if you have a 1, 2, 3, 4, as many as house property. So if you have any house property, we can say, and it is let out for full year, 12 months. If it is let out for 12 months, full year, from 1st April 2022 till 31st March 23 for our previous year. So if it is let out for 12 months and full 12-month rent received, both conditions must be fulfilled. So if there is a property which is let out by you for 12 months and listen carefully, both conditions should be satisfied. So if you have a property which has been let out for 12 months and the full 12-month rent has been received. So you might having a question in your mind now that what if 12-month rent not received? So for that purpose, there is case number E. So for case number D, you can only solve those questions as per case number D, in which it has been given in question that you received full 12-month rent and the property was let out for full 12 months. And those cases, those treated as deemed let out. So two kind of cases will fall under case number D. One is those are actually let out for 12 months and full 12-month rent received. And second case is those houses, those were treated as deemed let out. So in case of deemed let out, property is just assuming to be let out. And when it happens, when you have more than 2 self-occupied or unoccupied properties, then the remaining will be treated as deemed let out. So if in C case, for example, we have 3 properties, those are self-occupied, all of them. Then 2 is going to be solved as per case of A or B, and this will be treated as deemed let out. And all deemed let out cases will fall in case number D. So D consists 2 kinds of situations, 2 kinds of cases. If it is actually let out, then it should be let out for 12 months and full rent should be received. And all those property, those are falling under deemed let out category, will also going to be solved as per case number D. So when property is deemed let out, technically there is no concept of rent received because it is not actually let out. We are just assuming this self-occupied or unoccupied property is deemed let out. So how we are going to solve it? Now the time come when we will understand how to calculate the gross annual value. I also told you in the first session that kindly calculate gross annual value very, very sincerely, very carefully. Because if gross annual values goes wrong, that means you might not get even 1 marks in the numerical question of house property because everything is connected with gross annual value. So if gross annual value is wrong, technically annual value is also wrong. Then deduction of 30% is also wrong. Then technically what is left? Then nothing left if GAV is wrong. So how we will calculate the gross annual value in D case? It says in the question there will be a value given that is called municipal value. In the question there will be given a municipal value of this house property. So what is the municipal value? Technically, in simple sense, I can elaborate you like this, that as per the municipal authority of that area in which that house is situated, they decide the rental value of that property as per their provision. So municipality will decide the rental value of this property as per their concept, as per their provision. That is called technically municipal value. We do not need to know what technically it is because it will be given in question directly. We just need to know how to take this municipal value and what is the treatment of this municipal value in our numerical. Okay. So municipal value will be given in question, whatever it is, it has been given in your question, kindly write it down. Then there will be one more value that's called fair rent of that property. Fair rent, as a name suggests, the market rent of that property. That is also being given in question. Do not worry. Everything will be given in question when it's about numericals. You just need to know the process, just you need to know the provision where we and how we should put it in the question. So there will be two values will be given in question. Initially, you need to take municipal value and fair rent. That is also going to be given in question. And out of these two, which is higher? Listen carefully. Out of these two, which is higher, will not be treated as gross annual value. No, not now. There's more steps to find out the gross annual value. So whatever value is higher, that is not going to be treated as gross annual value. Then the next step, this was step number, technically we can say step number 1. Step number say you need to take municipal value out of that question, then find fair rent. Both must be given in question. And whichever is higher, you need to take that higher with you. Now this higher need to be compared. Now we can say step number 2 is this. Now this higher need to be compared with another value, and that is called standard rent. There is an act that is called Standard Rent Control Act. So that Rent Control Act value will also be given in question. What if this is not given? I will explain you later. First of all, assume that all values have been given in question. So first of all, municipal value, fair rent, whichever is higher need to take. This higher value need to be considered, need to be compared with standard rent, which is also given in question value. So now we will compare between this higher value and standard rent value. And whichever is lower, listen carefully, whichever is lower is not going to be gross annual value. Have patience, it will come. But the lower from this value or standard rent is again not going to be treated as gross annual value. When gross annual value will arrive, it will arrive. Have patience. So now the last step we can say to find the step number 3, we can say to find the gross annual value is this. This lower value now need to be taken and it need to be compared with another value that is called actual rent received. So in our case number D, we just discussed that those cases will fall, those have let out for 12 months and rent received full. So technically over here, there will be 12-month rent will be calculated. And in case of deemed let out, this point will not be applicable because there cannot be any actual rent received in case of deemed let out, because these are just assuming. Technically, this property is self-occupied, but for the purpose of income tax, we are just assuming that it has been let out. So there will be no actual rent received in case of deemed let out. Now, out of these two, which is higher? This is now gross annual value. So we need to find out first of higher, lower, higher. It's alternate. Higher, lower, higher. Always remember, first of all, municipal value, fair rent, whichever is higher need to be taken. Then is higher need to be compared with standard rent. That lower value has also one other name also. We call it expected rent. So if in question is asking calculate only expected rent, then this lower value name is also expected rent. So you can solve that question till only over here. If they are not asking GAV, they're just asking what is expected rent, then this is called expected rent also. Okay. then this expected rent we can say need to compare with actual rent received, and whichever is higher, that is going to be called gross annual value. Now, what if in question municipal value is not given? If in question, suppose only fair rent has been given, there is no municipal value, then there is no issue. This fair rent value will be treated as only higher. If in question standard rent value is not given, not a problem. Whatever is higher is technically treated as lower also. You should not write zero. You should not write nil. Otherwise, that lower will be nil. So if there is any value which is not given in question, then what you need to do, you just skip that value and the higher lower will be calculated only on the basis of that value. So if question standard rent is not given, this higher will be called, of course, lower. Again, in case of deemed let out, this will not be there. So whatever is lower value, that is going to be your GAV. Once you find out the GAV, then the question solution is very easy. If I'll move on from over here, like we find the GAV, then just you need to follow the format. After GAV, what we need to deduct? We need to deduct municipal taxes. It should be paid by the owner in the previous year. That is going to be deducted. There will be annual value less standard deduction or statutory deduction 30% of annual value. This is very simple. You need to take the 30% of this and less current year interest, same as per case A and B. There is no difference, and 1/5 of PPI. But there is a good news. Now there is no limit. The limit of 30,000 and 2 lakh is applicable only in case of A and B. From case number D onwards, D, E, F, and G, there is no restriction on the amount of interest which comes for deduction. So even if it's 2 lakh, 3 lakh, 4 lakh, 5 lakh, any amount, you can deduct the whole amount. Only the case A and B has some restriction regarding the interest total value. There is no as such restriction for case number D, E, F, G, anything. So this is the way we need to solve case number D. Municipal value, fair rent. After fair rent, you need to calculate the higher or standard rent. The lower will be expected rent, name called. That lower need to be compared with actual rent received. And if it's higher, that is called a GAV. After GAV, the process is same for every case. From D, E, F, G, all cases have same provision, except GAV calculation will be changed in case of E, F, and G. After calculation of GAV, all provisions are same, even if it's case number D, E, F, and G. So I've already explained to you if the municipal value is not given in question. So we will skip that value. The fair rent will be treated as higher. If suppose standard rate is not given in question, then the whatever is higher, that is treated as expected rent. That is treated as lower also. So if any value is missing, these are technically fixed values. Like municipal value is a government value, that is fixed. Again, the fair rent is not a government value, but it's again a fixed value, the market rent of that property. It cannot fluctuate. And again, standard rent also a fixed value, which is prescribed by the Rent Control Act. So we have done case number A and B. Those have the same treatment. Case number C does not have any treatment. Case number D needs to calculate gross annual value. And if you are able to calculate the gross annual value in any numerical of a house property correctly, then let me tell you, you can score full marks in that question, because after that, there is nothing to do. That's just GAV, then municipal taxes that will be given in question, and then interest calculation only left. And that is not technically income tax part. Interest calculation is like mathematics or normal interest calculation, what we have already done from so many years. Okay. So now we have complete case number D. Let's move on to a question. So that will help you to understand how to calculate gross annual value in these cases. So formula is very simple. It's just higher, lower, and higher. Do not jumble up with the value. You do not need to calculate municipal value with standard rent. First step, municipal value and fair rent. Let me share with you a study question. So you and we will understand these provision nicely. That is page number 4.131. There is a numerical. We need to understand how we calculate the gross annual value. So I'm not showing you the answers, of course, and there are 5 different cases in which you need to calculate the gross annual value. Treat these cases as case number D. So if in first case, I will ask the question, you need to calculate and send me the answer. Okay, let's see how attentive you are, how sincere you are, how passionate you are for your CA course. So house 1, they are separate cases. House 1 municipal value 80,000, fair rent 90,000. Actual rent received or receivable is 72,000. So find out the GAV of house number 1 and tell me. Fast. It's not difficult. I'll not give you much time. Maximum 10 or 15 seconds you will have to find out the GAV in all these cases one by one. कविता आस्किंग स्टैंडर्ड रेंट कितना होता है? कविता, स्टैंडर्ड रेंट क्वेश्चन में गिवन होता है. कितना होता है आपको कैलकुलेट करने की जरूरत नहीं है. ओके. कविता इज आल्सो वर्किंग. 30,000 2 लाख क्या है? कविता, 30,000 2 लाख फर्स्ट सेशन के लास्ट में बताया था क्या है. तो प्लीज कृपया करके आप फर्स्ट सेशन में जाएं, उसमें देखें 30,000 2 लाख क्या होता है. और ऐसे क्वेश्चन मत पूछे, हम ऑलरेडी डिस्कस कर चुके हैं. ओके. Okay, Dhyanesh is saying in case of deemed let out property, then GAV is expected rent. Is it correct? Yes, of course, because we need not to calculate step number 3 in case of deemed let out property. So whatever will be the lower value, that means expected rent, that is going to be your, of course, GAV. So the correct answer of first question, how we will solve it? Municipal value, fair rent, whichever is higher is 90,000. Now standard rent is not given, so that 90 will be called lower, that is 90,000. And then 90 or 72, whichever is higher is 90,000. The correct answer is, of course, 90,000. Well done. Those are giving the correct answer. Sameer is saying 80,000. Wrong, Sameer. Very wrong. Okay. Jyoti is saying 72,000. Again wrong. Kindly read the provision and apply provision correctly. Second house answer, please. First answer is 90,000. Second. So those who has given wrong answer of house number 1, now try it in case of house number 2. Municipal value, fair rent, whichever is higher, take that higher value. Now compare that to standard rent and take the lower value. Now that lower value, compare it with the actual rent and take the higher value. Is that simple? What is difficult in this? Very, very simple. Even at, I guess, 10th class or 8th class or 9th class or 8th, 6th, 7th class, students can also solve this. Because they're very fixed step and very easy steps. Nothing complicated, just easy. Just have patience, read the question carefully and solve it. It's higher, lower, higher. The second case answer is, of course, 55, 60, higher is 60, 60, 75, lower is 60, and then 60 and 72. The correct answer will be 72,000. House number 3, 4, 5, you can solve it like this. Here is a solution. In first case, 90,000, second case, 72,000, third case, 60,000, then 30,000, and then 78,000. We have more complicated questions. So I'll prefer that I'll ask those questions with you because these are very simple. You will solve it like this. Okay. So that was the calculation of GAV in case of D case, where property is technically let out for whole year and the full rent has been received. Moving on to case number E. So we have done with case number AB, which says annual value nil. We can deduct only interest part. Current year 1/5 of PP. I am writing again and again. Why? You know why? Because it will technically help you as a revision. That's why I've already written this in last sheet also. And again, writing this over here because it will help you to revise yourself. So that will be 30,000 or 2 lakh. Maximum. We have discussed it. Then case number C was a selection case. Then case number D we have discussed, and that says if you have any house property, if you have 10 house property, all of them are let out. All are going to be solved like case number D, which says if property is actual let out for 12 months plus rent received 12 months, or those cases fall under deemed let out category. So that was case number D. We discussed it, that you need to calculate GAV as per rules, and then you need to follow the format. Now we are moving on to our new case, and this is case number E. Again, I am saying if you are able to find the correct case, then you will able to solve the question very easily. Now case E says that if you have any house, which has been actually let out for 12 months, which is actually let out for 12 months. So if you have any house which has been let out actually for 12 months, like case number D, but there's a difference, but full rent not received. That we called unrealized rent, as we called bad debts. We all know what the meaning of bad debts in case of business, that if we have a debtor and he has not paid our full money and there is some amount is not recovered from that debtor, we called it bad debt. So technically what we called bad debt in case of business head, over here we called it unrealized rent. So if there's any tenant who actually was in our property for full year, 12 months, but we are not able to recover the full rent from him. Full rent doesn't mean 12 months, but we are able to recover only 10 months rent, 11 months rent, or 8 months rent, or 6 months, or 5 months. So that is called unrealized rent. The name suggests, you can feel it, that is unrealized rent. That means the part of rent which has not been recovered from the tenant, which was technically in our property. So that is technically called bad debt. So if you want to understand the correct logic of it, this is technically a bad debts of house property. Do not write it as bad debts in examination. In examination, we need to use this word unrealized rent. But the concept you can understand in an easy way. So technically, this is the bad debts of house property. So if there is a situation where property is actually let out for 12 months, but full year rent not received. If the full year rent has been received, that will be solved as case number D. So if full year rent does not receive, there are some months for which we did not receive the rent. We tried our best. We filed a case against him. We tried to vacate him from the property. He left our properties, etc. So we need to prove it. We need to prove it that there is some unrealized rent. What are the conditions? Those are written in the notes also. So if there is unrealized rent, then how we need to solve it? We need to find the GAV. The GAV step 1 is same as per case number D. That means municipal value, fair rent, whichever is higher. There is no difference. Then step number 2 is also solved. Same actually. This higher need to be compared with standard rent, and whichever is lower will be called your expected rent. Only third step is going to be changed. Only just a single change. This lower value now need to calculate. And you can see there is no change because I will write actual rent received. This value is going to be over here. Actual rent received. And whichever is higher is gross annual value. So if there was unrealized rent of 3 months exists, for example, tenant occupied the property for full 12 months, but he only paid 9 months rent. Understand? He only paid 9 months rent. So 3 month rents is unrealized rent. Now this word say actual rent received. So how much month rent we will take over here? Of course, only for 9 months, because 3 months rent have not been received. So technically, we will take only 9 month value over here. You can do it right, also write like this, like 12 months rent minus 3 months unrealized rent. Then this value you can take over here also, or you can directly take 9 months value. So in D case, we take 12 months rent value because all rent has been received case. But if case number E, there is only one difference, that is only those month rent will be taken in third step, which actually been received. And the higher will be called your GAV. Listen one thing very carefully. These value will be always for year. This is not going to be proportionate into the 9 months. These will be government or technically fixed value. And we will take the whole value which is given in question. Only ARR will be, as the name suggests, actual rent received. So if I say that he only received 9 months rent, then technically how much value I should write here? Of course, 9 months value. So whatever will be your GAV, that is now our GAV, and the balance solution will be like same as per case number D. There is no difference. We need to deduct the municipal taxes paid by owner, then annual value, then 30%, and then interest with no limit. Whatever amount interest will come, you can deduct out of the annual value. So technically, difference between D and E is nothing. Automatically, when D case come, because the full rent is received, so we technically take 12-month rent value in actual rent received column. And in E case, because my formula is actual rent received, so you automatically take 9 months value, so the GAV will arrive. But why I am discussing, why I have made these cases separate? Because in examination, when E case come, like when there is unrealized rent, so you should not confuse, you know now that I just need to take those month rent which actually has been received. And you can solve it very easily. In examination, you not need to write as per case number E solution. No, there is no case A, B, C, D in Act. You can name it like case 1, 2, 3, 4, or Shah Rukh Khan, Salman Khan, Hrithik Roshan, whatever you name, like it. It does not matter. Or Batman, or Superman, or Wolverine, or Deadpool, whatever you like. But it's just for your help that whenever a question came in the examination or anywhere, you put that question as per these cases. And if you are able to put this question as per the specific case, that is technically going to be very easy, because if you understand that this is case E, then you forget about all the other cases, like forget about A, C, D. Now you know what I need to do. I just need to calculate the GAV with actual amount of actual rent received, and that will solve my question. Understood? That was case number E. So we have done case A, B, C, D, and E. So 5 cases has been done. Now we left with case number F and G. So moving on to our next case. Let me have some water. Did you find house property difficult till now? Do you really think it is anything difficult in this? It is confusing. Might be some of your friends might going to say you that house property is confusing. It is confusing if you do not know which case is going to be applicable. Now we left with case number F and G, and you understand, yes, at the end you will feel that, yes, if I am not able to find that which case is applicable, the house property is difficult. And that's why I make the separate cases. So you will be able to find out which case is applicable in my question. And that is really, really going to help you a lot. Okay, a lot. So do you find difficult? I don't think so. Anything is difficult. It's very simple. I know it's very simple. Very dull. Miss Kruthika V is asking, sir, what is the difference between fair rent and standard rent? I think you joined this class late, because I just discussed some time before the difference between fair rent and standard rent. Fair rent is the market rent, which is technically the market value, rent value of that property. Standard rent is as per Rent Control Act. So you can scroll back the video and you can watch it. There we explain the meaning of standard rent and fair rent both. Okay. Okay, Pranav is saying this topic is most easy topic of income tax, as remaining all are very hard. No, just create your interest in income tax. If you create your interest in income tax, suppose this is the way of your income. This is the only thing you are able to earn with if you understand income tax, you'll be able to earn respect, money, etc. And you will feel that this interest will develop. And when the interest will develop, everything is easy. Okay. So next, moving on to case number E, we have completed A, B, C, D, E. Now we left with case number F and G. Before taking the case number F, first of all, we will discuss case number G. Fine. So I am discussing case number G before case number F because F is the most confusing case. So we will discuss all the easy case ones. Then we will move on to last case, that is case number F. Case G says that if there is any property with this situation, it says part of the year let out and remaining part of the year self-occupied. So if there is a property which has been let out for part of the year and remaining part of the year, it's self-occupied, not vacant, not unoccupied. That means there are either tenant was there or we were there. So property was not vacant. It was either tenant was living there or if tenant was not there, I was there. So for example, if it say like 8 months, property was let out, and 4 months it's self-occupied. So which case we are talking about? Case number G. 10 months let out and 2 months self-occupied. 10 months let out, 1 month self-occupied, 1 month vacant. Case G not applicable. So case G will be applicable only, and we are talking about a part of the year, not part of the house. If the case is this, there is a house and the ground floor is let out, first floor let out, second floor self-occupied. This is not case number G. This is not case number G. Which case it is? It is case number C. Multiple cases. So in this case, these two let out is going to be solved as per case number D or E. So if there is full rent recovered, then as per D. If rent not recovered, then as per case number E. This self-occupied is going to be solved as per case number A. So this is called part of the house. If part of the house let out and part of the house is self-occupied, then we are talking about case number C, which technically is going to tell you as per which kind of case the part is going to be solved. But this is now part of the year. It is not part of the house. It's part of the year. It has been let out and remaining part of the year it's self-occupied. So case G says whether you were in the house or the tenant was in the house, there was no vacancy. So if there is case number G, how we need to solve it? Same as case number E. There is no difference. There is no difference. Same GAV need to be calculated as per case number E. Like municipal value, fair rent, whichever is higher, standard rent, whichever is lower, that is your expected rent also. Expected rent or actual rent received as per case number E. Higher will be your GAV. Actual rent received will be for those months the property was of course let out. So if 8 months was let out, we will take 8 months rent over here. If it is 10 months let out, we'll take 10 months rent over here. Whatever will be the higher, that is your GAV. After GAV, all case D, E, F, G solutions are same. So practically, if you can see, then there is no difference in the solution of D, E, and G. D is taking actual rent received full 12 months. E is taking actual rent received of that amount which have been received. G is also taking actual rent received for those months property was let out. So why I'm saying that you should understand this provision like D, E, and G separately, because if in examination, when it comes like property is let out and property is self-occupied and property is having some unrealized rent, the student get confused. So if you will understand that if there is a question in which these cases fall like let out plus unrealized let out and self-occupied, there is no worry. All solutions are same. You just need to find the actual rent received and compare it with your expected rent, which will be same in all cases. the higher will be your GAV, and you can solve further question very easily. The all problem, the all complication, the all confusion is in case number F only. So now we are moving on to our last case, case number F. Then we will discuss illustration one by one, and we will discuss the provision also with our notes. Case number F. Now, case number F having certain strange feature. Okay, so let me do like this. Okay, case A, B, we all know. That is self-occupied or unoccupied, maximum 2 house properties. Annual value, of course, nil. Interest 30,000 or 2 lakhs. Done. Okay. Then case number C. C is a selection criteria case. So if you have multiple houses, it will tell which will go into case A, B, which will go into case D, etc. Now case number D says if property is let out for 12 months plus full rent received, or deemed let out property. Which will be deemed let out? That will be decided by case number C. Now case E, let out for 12 months, but some bad debt. That means some unrealized rent there. So what we need to do? ARR will be for that month's rent has been received. In G case, property is not let out for 12 months. Remember, in D and D, property is let out for 12 months, but in G case, property let out, for example, 10 months and self-occupied for 2 months. It's not unoccupied. It's self-occupied or let out. So that case number G. In all case number D, E, and G, same concept applicable. Rent received only will change. Otherwise, all provisions are same. Now case number FK. Now listen it very carefully. If I am an examiner, I am going to frame case number F for you because you are doing CA, not BA. Okay. So case number F, it says if there is any house, which is let out for part of the year, like case number G, and the main thing is vacant for some part of the year. You can see they all are mutually exclusive cases. No case is similar to other. That means the question will be different. Case A or B will be applicable when unoccupied or self-occupied. Case C is a selection. D is full 12 months let out, full 12 month rent received. E, full 12 month let out but full rent not received. G, full 12 months not let out. It was let out and self-occupied. And in case of F, there is let out and vacant. You can see in case number D, E, and G, there was no vacancy. In D case, full 12 month let out. In E case, full 12 month let out. In this case, let out less than 12 months, but remaining time was self-occupied. There was not unoccupied. So if these two conditions fulfill, which condition? That property is let out as well as vacant. Let out as well as vacant. Then always case F apply. Always. Why I am saying this? Because there might be this kind of situation also. Examination or question says 8 months let out. Do not get confused. Then 3 months vacant and 1 month self-occupied. Now you confused. It's let out and self-occupied also. So should we go in case number G? No. If these two conditions fulfill, that if there is let out and vacancy, then always case number F. If question says out of this 8 months rent, 2 months rent unrealized. Out of this 8-month property was let out. The same question has been given. 8-month let out, 2-month unrealized rent, 3 months vacant, and 1 month self-occupied. So because now unrealized rent also come into the fold. So should we solve it as per case number E? No. Because if this is let out and vacant, then all other conditions are irrelevant. You are going to solve it as per case number F. The treatment of this self-occupied unrealized rent will only be done as per case number F provision. So if these two conditions has been fulfilled, let out and vacant, then case will solve as per case number F. Whether it has been self-occupied also, whether there are some unrealized rent also, it does not matter. It will always going to be solved as per case number F. And now what case number F says? Case number F again says the same thing. There's a difference in calculation of GAV. All other things will be remain same. There will be no difference. We just need to calculate GAV with a different procedure. Otherwise, everything is same. Now, what it says, we need to calculate the GAV. Let's see how. Step 1 is same. That's a good news. That first of all, municipal value, fair rent, whichever is higher. Clear? Then step number 2 is also same. Very good news. This higher need to be compared with standard rent if given in question, the lower. That is called expected rent also. Now step number 3. This is the problem. This is the problem, or we can say this is the technical point. Step number 3 says the expected rent. Of course, this value, it is same again. This lower value, we can say. Whatever it is, write it down. Like we assume that is lower value came 3 lakh rupees. So this is 3 lakh rupees, lower value. In all the cases, case number technically D, E, and G. In case of D, E, and G, we compare this. We compare this lower value with actual rent received. The word is ARR small, actual rent received. But in case of F, we will not technically compare it with actual rent received. We will compare it with annual rent. In short, AR. You understand the difference between annual rent, the actual rent received? These two words have different meaning. Actual rent received means whatever rent received by you, actually. Annual rent means that is 12-month rent, annual rent. Whether you received or not does not matter. So you need to compare it with annual rent. That means full 12-month rent need to be taken over here for comparison. So it is going to be compared with annual rent in case number F, not the actual rent. Suppose actual rent was 30,000 per month. Clear? So property was let out for 10 months and 2 months it was vacant. The question is this, rent was 30,000 and 2 months it was vacant, or let's do it like this. Just change it. Okay. 30,000 per month. Property was let out for 11 months and 1 month property was vacant. So 11 months it was let out and 1 month property was vacant. So now we need to solve it. So if I'll need annual rent, it will be for full 12-month rent. So here it will be total 3,60,000. Now the provision says, out of this annual rent, before comparing with this 3 lakh, before that, you need to deduct unrealized rent if in question. If there is some unrealized rent, you need to deduct. It is before comparing with this expected rent value. And if there is any rent which is not going to be received because property is for self-occupied. So if there is any self-occupied rent, then you again need to deduct it before comparing to this expected rent value. You need not to deduct vacancy time period rent over here. So if there is unrealized rent in question, you need to deduct it out of annual rent. And if there is some self-occupied time period also, you need to deduct it from annual rent, because if there is any unrealized rent, so that means it has not been received by you. So out of this 12-month rent, you need to deduct the unrealized rent if given in question, and also self-occupied rent if there is some part or some time the property has been self-occupied. Whatever will be over here after deducting the unrealized rent or self-occupied rent, that is going to be compared with this expected rental value. The thing is not finished yet. Let me take on the other sheet. This is very messed over here. Let me explain the case number F. This page again. So case number F says if there is any property which is let out and vacant, then we need to apply case number F. Okay. Then it does not matter if it is self-occupied also. Then again case F will remain, or if unrealized rent also there, again case F will apply. We discussed it that case F is universal. If there is these two conditions fulfilled, then other conditions are irrelevant. First thing. Then we are moving on to calculation of GAV. Now GAV step 1 is same. Municipal value, fair rent, whichever is higher. This higher need to compare with standard rent, same provision, whichever is lower. Clear? This lower value should be written. And now this need to be compared with annual rent, not the actual rent received. We will compare it with annual rent, which means full 12-month rent. So whatever annual rent value is over here, need to deduct. If in question there is some unrealized rent exists, you need to deduct it. If there is some self-occupied period, of course, self-occupied is already included in this annual rent. Unrealized rent is the rent which is not going to be received. And again, self-occupied, if property is self-occupied, then again there will be no rent. So in annual rent, we add everything. So we need to deduct it. Unrealized rent and self-occupied rent. Now we need to compare it. The value came. This is going to be compared with expected rental value. Now, one more twist in the story. So first twist was this. There will be annual rent. And if in question unrealized rent or self-occupied rent is given, then first we need to deduct it out of that annual rent. Then we will move on to comparison with expected rent. Now there will be two situations. We always take the higher as a GAV. But there is a twist in the story. It says if this value comes higher, if this, in these two values, if this expected rental value comes higher, for example, this is 2 lakh, this is 1,90,000. So if this value is higher, then this will be called GAV. Another provision will apply normally. GAV less municipal taxes, there is no difference in that. So if this is 2 lakh, suppose, and this came 1,90,000. Then this is higher. And if this value is higher, it is government value. We can say it's fixed value that will be treated as GAV. But listen carefully. If this is 2 lakh and this comes 2,20,000, then of course, whichever is higher is this. But the problem is something else. So if this value comes higher, that is your GAV, you can solve the question further. Done. But if this value is higher out of this expected rent and this value, this is higher, as in this case, then this higher will not be GAV yet. There is one more step you need to follow. You need not to follow if this is higher. This is higher, it's done GAV. But if this is higher, this will not be treated as GAV because we need to deduct one more last thing. And that is vacancy period rent. You can see we take all 12 months rent over here. Out of this 12-month rent, we need to deduct those rent which practically has not been received. So if there is unrealized rent, I need to deduct it. If there is self-occupied time property, there is no rent, so need to deduct. But vacancy time period rent will also not going to be received. But the concept says you need not to deduct vacancy period rent over here. No, you need to deduct it only because the provision says like this. We are going to discuss these provision, and it says if the rental value is less due to owning of vacancy, then this value will be taken. So the practical implication you need to do like this. This is easy. If you read it with the help of study or the act language, it is really difficult to understand what they are technically saying and how we going to solve it numerically. So I have made this process to you that first of all, deduct unrealized rent and self-occupied rent if that is given in question. If out of these two value, this value is higher, this is your GAV, you not need to deduct vacancy out of this value if this is higher. Fine. If this value is higher, if this one is higher, then you need to deduct the vacancy time period rent. If vacancy is for 2 months, the 2 months rent or whatever it is, you need to deduct from over here. After deduction, what will come? That is your GAV. Interesting. Mazaya? Great. Good. That's why I like income tax because it's so beautifully complicated at times that when you actually understand it, you feel so good that yes, I cracked it. I decoded the concept, how we need to solve it. So as per the law provision, when we will discuss the language of act about case number F, or in the case when vacancy is there, you will not able to understand what exactly X wants you to do technically. Because it say if there is value which is owing to vacancy, then the lower value need to be selected. So they will say the lower value selected if that is due to owning of vacancy. So practically in examination, we need to solve it like this. So if this is higher, this is GAV, and if this is higher, then you need to deduct the vacancy time period. As I always says, when we read the numericals provisions theoretically, it's hard to understand what exactly happening. But when I will solve a question with you or 2 questions or 3 questions of vacancy, you will feel it's very easy. A question must be coming into your mind now. As I just solved it, that if this is higher, this is GAV. But if this is higher, then vacancy time period rent also need to deduct, and whatever will come after that will be your GAV. And after that, numerical is same. No difference. But there is a problem. There might be a problem. What if both are equal? Anybody think about it? What if these both are equal? Like this is 2 lakh and suppose this is also 2 lakh is coming from this. Now what we should do? We should take this as a GAV or this. It does not matter if it is happening in case number D or E or G, because in both cases there is no other treatment. But because if in this case, if we take this 2 lakh, then we can deduct the vacancy period rent, and that is beneficial for you. So your GAV will be lower, your tax liability will be lower. But if we take this 2 lakh, then we cannot deduct the vacancy time period. So if it is equal, then again, this provision will follow. So in case of equal or higher value, you need to take this and you can deduct the vacancy time period. So if they are 2 lakh, then you can take this 2 lakh over here and you can deduct the vacancy time period out of this value also. So if this is higher, only then it can be GAV and you cannot deduct vacancy time. But if this is higher or equal, then following provision, this provision will apply. Let me say or discuss with you with an example, then you will find it's not that difficult. Let me write down an example for you. Or say, Mr. Superman let out a property to his tenant, and it has been let out for 30,000 rupees per month. Municipal value of that property was 4 lakh. Fair rent of that property was 3,60,000. Standard rent of that property was 2,80,000. Okay. Let out for 30,000 per month. It was let out for 9 months. Vacant for 1 month. And unrealized rent for 1 month. So how many months we have? 9, 10, 11. And self-occupied also for 1 month. Clear? We have taken all the cases. So 9, 10, 11, 12. Clear? So 9 months it was let out. And 1 month it was vacant. Let's do it for 2 months it was vacant. And 1 month self-occupied. So it is not 13 months because unrealized rent 1 month is including in let out. So unrealized rent is not a month extra. It is out of the let out month because 9 months it was let out. So technically the rent received only for 8 months because 1 month rent was unrealized. So 9 months let out, 2 months vacant, and 1 month that was self-occupied by Mr. Superman. So now we need to calculate it as per case F because the property is vacant as well as let out. Other cases irrelevant. So we need to apply case number F. In examination, we need not to write as per case F solution or E or D. We just remember it. Now we need to solve it as per case number F provision. So GAV calculation will be like this. Municipal value fair rent, whichever is higher, 4 lakh. This 4 lakh and send whichever is lower, that is 280. So I'm directly writing it over here. Expected rent is 2,80,000. Now we need to take over here annual rent. So what will be annual rent? Full 12 months rent technically. And that will be 3,60,000. Now what we need to deduct? We deduct unrealized rent. If in question, yes. In this question, unrealized rent for 1 month. That means 30,000. 1 month self-occupied. There is vacancy also, but we will not deduct the vacancy rent right now. We will deduct it after comparison if the case applicable. So now my value is 3 lakh rupees for the comparison. So out of these two values, whichever is higher is this value. So if this value is higher, now we can deduct the vacancy time period. Vacancy is for 2 months. So that means 60,000 can be deducted over here and GAV will be 2,40,000. It's just following the step. There is nothing complicated in this also. If you are able to remind these steps that what is the exact step, then you can solve it very easily. Look how simple it was. There was nothing complicated. What if this value is, if I change, for example, if I say that this value is not 280, it's 3,20,000. So now 4 and 360, higher will be 4 and 4 and 320, lower will be 320. So that will be 320 over here. So if this is 320, that means this value is higher. And in this, out of this value, we cannot deduct the vacancy time period. So that is technically going to be your GAV, gross annual value. What if it is 3 lakh? Then this step will follow and you can deduct the vacancy time period and GAV will be 2,40,000. I hope it's clear. It's not that difficult. I'm again saying this. If you remind the exact format you need to follow, you can solve it by anyhow. And it's technically very simple. So that was case number F. So we have completed our cases. Now moving on to our notes. One by one, we will discuss it. So this is multiple houses. Case number A and B we have discussed. Case number C, if multiple house properties, some of which are let out and some are self-occupied and some uses for own business, or there is multiple cases, then C case help in selection. Those are actual let out as per case D, E, F, G. Deemed let out as per case D. Self-occupied and unoccupied maximum 2 as per case A or B. And if used for his own business or profession, then PGBP. Some floor occupied as self-occupied, some are let out also as per case number C, self-occupied as per case A, and let out or deemed let out as per case D, E, F, and G. So C is a selection case, not a solution case. C does not tell you that how to solve this question. He just tell you go to there and solve as per that case scenario. Okay. Where more than one house is in the occupation of assessee for his residence is the theoretical part of case C. The income from house property in respect of one house which has a higher valuation shall be computed as per case A or B. There will be a situation also. There is a new situation also. Let me discuss it with you. In case of C, it happens sometime. For example, if it is question is giving that Mr. A, I will take the query after this concept. Mr. A has multiple houses. Suppose 4 houses. This is self-occupied, this is self-occupied, this is self-occupied, this is actual let out. So this is going to be solved as per case D or E or F or G, as the case may be. Fine. We assume that it is 12-month let out and 12-month rent received. So that is going to be solved as per case number D. No issue. Out of these 3, 2 will go to case number A and 1 will go to case number D, that is deemed let out. But the problem is this, out of these 3, which 2 will go to case A or B and which 1 will go to case number D as deemed let out. The problem is this. So for this kind of situation, we need to solve all of these 3 houses as follows. First of all, assume. There is nothing new we are discussing, just a new permutation combination. You might have remembered, it is just the same case in case of car perquisite. You remember the salary? Go to the flashback. House property. Before that, salary chapter, perquisite, car perquisite. Remember the diagram we have made? Remember after that diagram, it has been written that if you have more than one car for use, then we explained how it will be solved. That if you have more than one car, then one should be treated as both purpose used, private as well as official, and all other will be treated as exclusively used for private purpose. Which car should be used for private and official both, and which are going to be used as private? So I told you, first of all, calculate all cars value as private as well as official, and then calculate all car values assuming as only for private purpose, and then make permutation combination. Same concept of permutation combination over here. How? Like this. Assume all house properties as self-occupied. First of all, solve these 3 properties, assuming what if all these used as self-occupied? So first of all, you need to find the income from house property for these 3 houses, assuming all are self-occupied. So what will happen? Annual value will be nil for all. You can only deduct the interest provision. Clear? Whatever interest. Then you will have the interest from income from house property of all these property. Then assume all these 3 house property as deemed let out. All 3 house properties value as what if these are deemed let out value. So then you will find the income from house property if these are deemed let out. Then you will make the permutation and combination and find the minimum taxable value case. Let me solve you with example. I will take a short example. So it will be easy to understand the concept. There is nothing new. We will solve the deemed let out case as per the provision. The case, technically what we need to do. Once solve those all properties as case number A. And once solve all those properties case number D. That's it. After that, permutation combination. How it will be happen? Let me solve for you. I'm taking a small example. We are taking 3 properties. And all are self-occupied. So values are giving like this. Interest amount, current year and 1/5 of PPI, assuming the given like following. 30,000 interest has been paid for it. 60,000 interest has been paid for this. And 45,000 interest has been paid for this. This is 30,000, 60 and 40,000. This is inclusive current year and 1/5 of PPI. A limit of 2 lakh has been applicable for all houses. Now it has been given in question municipal value 1 lakh, 1 lakh, 1 lakh. Fair rental value 90,000, 120, 140. Standard rent value 80,000, 90,000, 150. Actual rent received, of course, not applicable because properties are technically self-occupied. So what we now do, we will solve all these properties twice. Once assuming all are self-occupied. So if we solve them, assuming all are self-occupied. So I'm solving over here. Case A, assume all are self-occupied. Technically, we need to solve all of them as per case number A. So if I solve them with case number A, then annual will be nil. Annual value nil. Only interest can be deducted. In this case, 30,000. In this case, 60,000. This case, 45,000. So there will be loss in all properties. So if I assume property 1 is self-occupied, there will be a loss of 30,000. Then in this case, it will be 60,000 loss. This case 45,000. Now we need to solve all these properties once, assuming they fall in case number D as deemed let out. So if we find the GAV for all these houses, let's find the GAV. First house is 1 lakh on 90,000, higher is 1 lakh. Then 1 lakh and 80,000, lower is 80,000. So GAV is 80,000 for house 1. 120, 120, 120, 90, 90,000 for second house. Then 1 and 140, that is 140, 140 and 150, that will be 1,40,000. So these will be the GAV. Suppose in question municipal tax is not given. So that is my annual value. $80,000. 90,000, 140. So I am going to deduct 30% of annual value and the interest also, which is from over here. That is 30,000, 60,000 and 45,000. And 31 will be 24,000, 27,000 and 42,000. So I will find the income from house property if these are treated as deemed let out. So in first case, that will be 26,000. I am doing this just to show you how we need to calculation of permutation combination. This will same can be applicable for calculating of car perquisite. You need to find once all car assuming as partly used for private and official, and once all car used for 100% private purpose. Then how the combination we made that you will see over here. The same way you can find over there also. This is 3,000. This is 53,000. So now we have values for all houses, assuming that what if they will be treated as self-occupied and what if they will be treated as deemed let out. Now we need to find that case, that scenario in which our tax liability will be minimum. So case A or case 1, we will treat two houses as self-occupied and one as deemed let out. Then we'll find the value. So case 1 says, what if we need to take the name of this. This is PQR house. So case 1 say we will take PQ as self-occupied and R as deemed let out. So what will be the value will be there? P and Q, if take self-occupied, the value will be minus 30,000 and 60,000. And deemed let out case of R value will be plus 53,000. So net income from house property in this scenario will be like this. So 90,000, 30,000 loss. So if we assume P and Q as self-occupied, then we need to take R as deemed let out. So in that scenario, we have loss of 37,000. Case number 2. Now we take Q and R as self-occupied. So what will be the value of Q? Minus 60,000. And what will be the value of R if self-occupied? Minus 45,000. And in that situation, we need to take P as deemed let out. So what will the P deemed let out value? That is plus 26,000. So in this scenario, we will have loss of 79,000. Higher the loss or lower the income will be the best option. Now case number 3. It said now we will take P and R as self-occupied. So what will be the value? P if self-occupied is 30,000 and if R self-occupied is 45,000. And in this scenario, we need to take Q as deemed let out and Q deemed let value is 3,000 plus. So technically 45 plus is 75 minus 3. That is 72,000 loss will be there. If we take case 3. So out of these 3, if we assume R as deemed let out, then the loss will be 37,000. If we take P as deemed let out, then the loss will be 79,000. And if we take Q as deemed let out, then the loss will be 72,000. So the best option is this. Higher the loss or lowest the income will be the best answer in income tax. So in this scenario, we can answer it this, that Q and R should be treated as self-occupied and P should be treated as deemed let out for the maximum benefit. Clear? So there is nothing new. We just need to solve all these cases once by case A, once by case D, and then you need to just make this combination, and the combination having the lowest income or highest the loss is always the correct answer. I hope it's clear. Moving on to our notes now. So this is the way case number C says that which house should be treated as. So there will be a simple calculation process, what we just explained to you. Case number D. Case D says house property let out throughout the previous year without any vacancy and unrealized rent. We know the same step 1, step 2 and step 3. We discussed. Case number E, house property let out 12 months, but unrealized rent there. You are there, it's you are, that means unrealized rent there. So tenant is not paying rent, then again the same case applicable, just rent receipt will be after deducting the unrealized rent, or we can say we will take the unrealized rent value after deducting from the annual rent, that is actual rent receipt. The clarification, that is a theoretical provision, you need to read that when unrealized deduction can be claimed, that should be bona fide. We need to take all steps for recovery of unrealized rent, like the bad debts. Case F, that is the case what we discussed, and I told you that this is the most complicated or technical case. If house property let out for part of the year and vacant, if let out and vacant and self-occupied also, if let out and vacant and unrealized rent also, and self-occupied also. So if two situations fulfill, then if there is let out and vacancy, then always case F apply, irrespective of anything else. Case F, condition 1, if property is let out and was vacant for part of the year and actual rent received or receivable is more than the sum determined as per step 2, in spite of vacancy period. So this is the theoretical provision. GAV as per case number D. If property is let out and was vacant for whole or part of the year and rent received or receivable owing to such vacancy is less than the sum determined as per case number 2. In that case, we need to deduct out of that GAV, we need to deduct the vacancy time period also. So this is a theoretical provision, and you can see this is not going to explain anything. They just say if due to vacancy, owing to vacancy, your GAV is less, then you can take the step as per 2 value. And if it's not, then you can take the step number D value. So that is very, very confusing. So that's why we just prepared the case number F. It says if the first value is higher, then you need to take that value. But if the second value, which we calculate after calculating annual rental value, then that value need to be taken as higher. And after that, vacancy time period should be deducted. What is the meaning of this owing to such vacancy? Let me explain you. What they want to tell you is this. They are just trying to tell you this thing. That if in this situation, when there was 2,80,000, this value was 280, and we solve it till over here, 3 lakh. So if we deduct the vacancy time over here, suppose what they are trying to explain you in theoretical provision, this vacancy time period, if deduct over here, this value will be 240. So higher will be this, and this will be your GAV. So departments say if due to vacancy, understand, if due to vacancy, this value is lower than this, then the lower will be taken. Understand? That's why I was saying it's very complicated logic, and they did not explain it clearly. So this is the way you can solve it very easily. Otherwise, only with the help of theoretical provision or as per the provision contained in the Income Tax Act, it is really, really difficult to understand what exactly they want to do. So technically they say if this vacancy is not there, then this value is higher. Of course. So if it is happening that due to this vacancy is lower, then you can take the lower value. But if this is automatically higher than this, if this is 320 and this is 3 lakh, then in that case, government value will be taken and vacancy cannot be deducted. Okay, example for this case number F. Here are some examples. We will discuss the example from study also. This is for your homework, of course. Okay, the value should be was November. No, it should be 22. Okay. Case number G, part of the year let out and part of the year self-occupied. So if property is part of the year let out and part of the year self-occupied, then same as case number D, you can solve it. Self-occupied time period is irrelevant. Deductions diagram, which has been copied from your study material. It says if your property is let out or deemed let out, then 30% of NAV allowed and interest limit is unlimited. The limit of interest deduction is 30,000 or 2 lakh only for case number A and B. For other cases, this is not applicable. Fine. This is the limit of 30,000 and 2 lakh rupees has been given over here. Now, recovery of unrealized rent allowed as deduction section 25A and 25AA. What if unrealized rent recovered? It's just like bad debt recovery. For example, your tenant, the total rent was 3 lakh and he did not pay 40,000 rupees in any preceding previous year. Suppose in 2019-20, there was total rent was 3 lakh and out of that 3 lakh, he did not pay 40,000. So what happened? That 40,000 we did not show in that year. We must took the actual rent received is 2,60,000 as per the provision of that year. Now, in current previous year, in previous year 20 to 23, your tenant is technically paying you unrealized rent, or we are able to recover that rent from the tenant. But in this previous year, we recover 40,000 of unrealized rent. Then what is the treatment? 70% of that unrealized rent is going to be taxable as income from house property. Because 70%, why? Because 30% is treated as standard deduction. After the 30%, 70% is going to be taxable. So if you are receiving 40,000 unrealized rent in current year, recovery of unrealized rent of any preceding year, which is going to be recovered in current year, current previous year, then 70% of 40,000, that means 28,000 is going to be taxable as income from house property. Even when, if you do not own that house in this year, you might have sold that house in earlier also, does not matter. So if you receive any income from any house which you own or not own as recovery of unrealized rent, 70% of that value is going to be taxable. The recovered amount is taxable as income from house property in the year in which it is realized, even assessee does not own that house in previous year, after deducting 30%. Area of rent, again, it's a concept of same, that is area of salary. If you receive area of rent due to any retrospective effect of any preceding year in the current year, then 30% after deduction can be taxable in case of area of rent also. Same provisions. There's some clarification. We will discuss these clarification after we resume after the break. So it's already 8:47. Before the break, let me take some queries and then we will go to the break. Go for a break, of course. Alok, kindly explain from module also after explaining concept. Alok, it's not easy to take module concept also. We are already short of time. It's a huge topic. So whatever in your study material, I have just explained with your notes also. But if you have any specific thing you need to ask from study material, you can ask me. Okay. Okay. Bharanti Doshi sir, from annual rent, we can't deduct vacancy rent. Yes, we cannot deduct the vacancy rent from annual rent because the provision says first you need to check what is the GAV. And if it is lower due to just vacancy, then you can take that value only as a GAV. So we cannot deduct the vacancy out of annual rent. We can only deduct that vacancy if after comparison, after lower value is coming higher. After lower value, that means the below value, the second value is coming technically the higher value. So all case understood. Well done, Dhyanesh. Very well done. Next, just as sir, this part was a heavy dose. Yes. And remember, if it is difficult, then it is important. And you are doing CA. If everyone else need able to understand that what is this concept, then what we will do in future. So if law is complicated, understand, if law is complicated, that means it's good for you because you are reading those things, those other person cannot understand. You are not reading income tax for yourself. Let me tell you very simple. You are not going to be a chartered accountant for yourself because you cannot audit of course. So we are doing this course. We are actually studying this time morning. You are sacrificing your parties. You are sacrificing a lot of things for this course, for not yourself. You are technically doing this for someone else who is sleeping right now. Someone else who is doing business because he will come to you later and he will hire you and pay you a good amount of salary. Or you start practicing for someone who does not know these provisions. So if law is complicated, technically it is beneficial for us. Because if every common man know how to pay income tax, suppose, what if government say, okay, everyone needs to pay income tax with the rate of 15%, that's it, khatam, finish. No salary head, no other head, nothing. Just you need to pay 10% or 15% of your income or 15% of your bank account value. Then what we will do? So it will be simple. That is not going to help you. So if it's difficult, it's good for us. If it's complicated, it's good for us because we are technically understanding something which others cannot do. What do you think? Doctor actually study for their operation. Have you ever seen any doctor who's operating himself? Why he's studying? Why? He's studying for us because we are not doing MBBS. So if we will be sick, so doctor will technically do what? They will charge from us. So technically you are studying, but for your future, but you are not studying for yourself because you are going to study all these things for someone else who do not have knowledge regarding income tax or any other course. And they are going to pay you for this one. Understand? You will feel study is not a burden. If it is complicated, it's good for us. There is higher GAV better or lower GAV? Of course, the lower GAV is better. If the low GAV is lower, then we need to pay tax less. What if we get analyzed rent we receive later? We just discussed it, Bharanti. In that previous year, we deducted from the annual rent, of course, but in the year we will receive it. That taxability will be there of 70% value. इनकम फ्रॉम हाउस प्रॉपर्टी के 3 ही लेक्चर नहीं, सेकंड लेक्चर है आज. इस इनकम फ्रॉम हाउस प्रॉपर्टी खत्म होगा. ठीक है. ओके, प्रतिमा इज सेइंग ऑल क्लियर. वेरी वेल डन. Okay, Subhashish is asking, sir, what if house property is self-occupied and vacant, which case will apply, or entirely vacant, which case apply? If it's self-occupied and vacant, same cases. Only when let out and vacant came, it case है. But self-occupied or vacant, same property, you can solve it by A or B. Those both have same provision. There is no difference in it. Question 5 of module bifurcation 70/25. We will discuss the question. Do not worry. What if property was self-occupied, Subhashis, and vacant for part of the year? That will be as entirely self-occupied. I told you, if there's self-occupied and vacant, you can solve it by any means. Annual value will be nil, and there will be interest deduction. That's it. It will be case A or B, does not matter. There's a change in this point. We will resume, then I'll tell you the main point. But the 7th point, no notional income. In the notes I uploaded, it was 1 year over here. Fine, 1 year. I just amended it over it. It's 2 year from the end. Fine. So you, all of you, please change this and remember this. This is not 1 year. The notes I uploaded, it was written over there 1 year, but it is technically 2 years. Fine. So you just change it by yourself, or I'll upload the notes again if you want. But there's only one change, that is 2 in place of 1. What it is, what it says the provision, I'll tell you when I'll resume after the break. So we are going for a break, and after break, we will read the clarification and we will do our numerical thing from the study material. So we are going for a break. See you after 10 minutes. Welcome back. So there are some query. Let me see the query. I hope Mr. Manisha Ben is saying, Mrs. Your formula is very effective, sir. Look, house properties are complicated provisions. If you read it from the act or from the study material, the theoretical provisions are really confusing. So that's why only I try to make the different cases. So once you get which case is applicable in the question, that will be really easy for you to solve it. If you need to learn the theoretical provision, or if any theoretical provision has been asked regarding the vacancy house, regarding the unrealized rent, then you should read the study from the study chapter provision. So for numerical, the concept I am teaching you, that's really effective and you can solve any question from that. But for theoretical provision, if you need to understand the cases theoretical provision, then you should refer study material also. Please listen carefully. You should go through one study material provision also. The implication will be same, but the provision which is in act, that is actually written in your study material, you can go through it once if you learn the theoretical provision as well. Okay. Okay, so Mr. Kojema is asking, if let out for 10 months and 2 months for business, so which case will be applied in those 10 months, 2 months rent is unrealized rent? That will be solved as per case number E. If you have received 10-month rent, then you can solve it by normal provision. For business part 2 months, it will be treated as PGBP. You can solve it by case number E or G also. There is no difference in it, of course. So if it is 10 months let out and 2 months used for business, then you can solve it by E or you might be solved by G. G will be the most appropriate case in this case. Okay. So moving on to our provisions. Okay, clarifications. There are some clarification you need to understand. If in question AR is given, that means actual rent is given, but FR is not given, fair rent is not given, then FR will be calculated on the basis of AR, and that FR will be called as expected rent also. So I've just told you that, let's move on to the sheet. Okay. So if there is municipal value, fair rent, standard rent, there are three values, and I've told you that if municipal value is not given, then skip this provision. If standard rent is not given, skip that provision, but I did not set this for fair rent. If in question fair rent is not given, but actual rent is given, then we need to calculate the fair rent multiplied by 12, and it will also be called as a expected rent value. For example, if municipal value in question is given 2 lakh rupees, fair rent is not given question, standard rent is 2,60,000, and actual rent 25,000 rupees per month is given. Clear? Now, if in question standard rent is not given, we skip that provision. If in municipal value is not given, we skip that amount. But if fair rent is not given, but actual rent is given, then we will calculate fair rent like this. That will be 3 lakh. Now you can calculate the GAV as per normal provision. And we can name it this also as expected rent. So now this is, whichever is higher is 3 lakh. 3 and 260, that is 2,60,000 is your expected rent. And then you will apply actual rent receipt, whatever case it is, and then you will find the GAV. So if fair rent is not given, then, and if actual rent is given, then you need to calculate fair rent by yourself. This is a very important point. Please remember it. Very, very important point. If in question actual rent is given, but fair rent is not given, then FR will be calculated on the basis of actual rent, and that FR will also be called as expected rent. If interest paid outside India and no TDS has been deducted, TDS chapter you will study in later session, of course. So if interest paid outside India and no TDS has been deducted, then such interest cannot be allowed as deduction, whether it's current year interest or PPI. So if interest is paid outside India, then TDS need to be deducted. If TDS has not been deducted, then In that case, that interest cannot be claimed as a deduction. If loan taken for house 1 but used in house 2, then deduction of interest will be allowed from house number 2. Unrealized rent deduction will be allowed when assessee proves that he took all steps to recover the rent from the tenant. These steps has been written over here also. Unrealized rent can be allowed as deduction if these condition has been fulfilled. This is also written in the clarification. Next point, in case of A or B, if loan taken for repair, etc. We know that if loan taken on or after 1499, deduction can be up to rupees 2 lakh in case of A or B. But if loan has been taken for repairs, renovation, not for construction, then deduction will remain 30,000 maximum for both houses, even if after took 1499. But if loan taken for construction, then this 30,000 or 2 lakh provision has been applicable. Okay. 6th point is again very important. I have told you that the municipal value, fair rent and standard rent value is always taken annually. It cannot be taken proportionately. If there is unrealized rent for 3 months, then these value will not get affected. But in some cases, you need to take these value also for part of the year. There is only one case. If house property purchased or sold during the year, then municipal value, standard rent, fair rent or ER will be taken for part of the year property owned by assessee. For example, house purchased in January 2005 for 30 lakh rupees and sold on 1st July 2022. So now we sold this house in our previous year and we were the owner of that house only for 3 months, April, May and June. And property was let out for 5,000 rupees per month. That means from April, May and June, we technically received 15,000 rupees as rent receipt. Property vacated by the tenant on 30th June and we sold it on 1st of July. Now municipal value has given for full year is 30,000. In all other cases, we take the full 30,000. Even in vacancy case, unrealized rent, it does not matter how many month rent you receive. But because you own that property only for 3 months, then full year municipal value cannot be taken. So we will proportionate the municipal value in that case, and that is 7,500. ER, that is expected rent, because actual rent has been given, but fair rent has not been given. So we will calculate the fair rent also, and that will be 15,000, whichever is higher, that is 15,000. And it will be compared to now actual rent received, which is also again 15,000. So GAV will be 15,000. So how we solved it like this? Because we are the owner of property for only 3 months. So in question, municipal value will come 7,500. Fair rent is not given in question and not even standard rent is given. So fair rent is not given, but actual rent has given 5,000 per month. So we will calculate it on the basis of actual rent for 3 months. That is 15,000. This is 7,500. Sorry. And now we'll compare it. That is 15,000 higher, 7,500. There is no standard rent. So we will skip that and 15,000 will be the lower value again. And actual rent received also 15,000. So the GAV will be 15,000. You can deduct the standard deduction and you will get your answer. Okay, 7th point is again, it says, as I told you, you need to change 2 year in place of 1 year in the notes, what I uploaded, where the house property consisting of any building and land appertaining thereto is held as stock in trade. Now it says, if house property is your stock in trade, then in this situation, what generally happens if there is a builder, he constructed 50 flats. And out of those 50 flats, only 10 has been sold. Now 40 remains with him. So the concept says that if you have house properties, then they will be treated as deemed let out. So if those 40 properties is going to be treated as deemed let out, even if we assume 2 has been used as vacant or self-occupied, even then 38 flat is going to be treated as deemed let out. That means you need to pay tax on the deemed let out rental value. So that will be a huge problem for that builder. So for the sake of builders, for their benefit, department has made this provision that in case this is only applicable for those who is having building as a stock in trade. So we are talking about the builders, etc. So if you have building as a stock in trade, then department says that 2 years till 2 years from the year in which property has been completed, that year and 2 years, it will not be treated as deemed let out. So stock in trade and the property or part thereof is not let out during the whole or any part of the previous year. The annual value of such property or part of that property for the period up to 2. So in the notes I have uploaded, it was 1 year. Kindly change it to 2 years. From the end of the financial year in which the certificate of completion of construction of the property is obtained from the competent authority shall be taken to be nil. What exactly they are saying? Let me explain you with an example. For example, if a builder construction complete on 1st November 2021, he has 10 properties, unsold properties. So provision says that in the year completion has been completed and the certificate has been obtained from a competent authority. So leave this year that it will end on 31st March 22 plus 2 more years. That means till 31st March 24, these property will not be treated as deemed let out property. It will applicable only if these properties are held as stock in trade. But if I am having properties more than 2, then except 2, this is going to be treated as deemed let out from the current year only. But this is only applicable for those those properties are held as stock in trade. So for the benefit, it has been provided that from the year in which these properties have been completed, that year and for next 2 years, they will not be treated as deemed let out. So it will save a lot of tax in the hands of the builder. Provision for house property will be same if property is in India or outside India. We discussed this provision in the initial stage also. Restriction on set off. This is the provision which you will going to study in set off chapter. Interest deduction section 24 can claim even if you have actually not paid the interest, but it has only been due. So interest deduction can be claimed on due basis also. So if there is interest due, you can claim it as a deduction. You not need to mandatory paid it. So there is a benefit for you. If interest is due, you can claim that deduction. One thing was left, some clarification on the first page was there. After that, we'll move on to our numerical part from the study material. Okay, that was initial clarification after charging section. This was okay. So point number 3, what we discussed in composite rent. After that, note number 3, I told you that we will discuss this note later on. So time has came. Income from house property can be charged where there is no real income. That is, it is charged on notional basis also. That means deemed basis also. And it generally happen in 2 cases. When SSC has more than 2 houses. We just discussed this case. If you have more than 2 houses used for self-occupied or vacant or both, then except those 2 houses, other is treated as deemed let out. So technically, if we have 3 self-occupied house, assume if we have 3 self-occupied property. So what case A and B will say that out of these 2 will be calculated as annual value nil. But this will be treated as deemed let out. So practically it will ask you that if is landlord having any real income? No, because all 3 has been used as self-occupied. So technically he is not receiving any rent or any kind of income out of these 3 property, but department say we will only free 2 properties. Balance need to be let out. Practically. But if you are not letting out the balance house, we will treat it as deemed let out. And what will happen? Out of municipal value, fair rent, whichever is higher, and out of standard rent, whichever is lower, that is going to be taxable as your GAV. So you need to pay tax in this case, even if you do not have any income. So under income from house property, you need to pay tax even you do not have any real income, not even due, not even received. Still, you need to pay tax. Generally, in all other cases, either the income has been due or received. Only in that case, you need to pay tax. But under income from house property, if you have more than 2 properties, or if your any property is actually treating as deemed let out, then technically you are paying tax without real income. One more case, it can be done if your actual rent received is less. For example, your standard value, your property is let out for 3 lakh rupees per annum. Now what happened? Your municipal value is 5 lakh. Your fair rent is 6 lakh. And your standard rent is 4 lakh. So in that case, higher and then lower is 4 lakh. Actual rent received is 3 lakhs. So if these values are going to be treated as GAV, technically you are receiving 3 lakh rupees, but technically you need to pay tax on 4 lakh rupees. So there is only 1 lakh rupees income, which is not a real income. That is going to be taxable on notional basis. So if you let out your property less than the market rent, if you let out your property less than the market rent, then it might be a case where you need to pay tax without having real income. So for example, if I have a property which market rent is, for example, 6 lakh, and my friend come to me that I need a property for my business. So I asked him, okay, market rent is 6 lakh, but okay, I will give it to you for 4 lakh rupees. In that case, it might be possible that my GAV will be higher, that is 6 lakh. So on 2 lakh rupees, I'm going to pay tax without having the real income of 2 lakh rupees. So there might be 2 cases when it happens. When assessee own more than 2 house property, then annual value of both house will be nil and any other house income that is self-occupied or vacant shall be chargeable to tax deemed such house as let out. So first, in case of deemed let out, it happens that you need to pay tax without real income. The benefit of nil annual value is available only for up to 2 self-occupied or unoccupied house property. And second is if fair rent exceed the actual rent. If your fair rent exceed from your actual rent, it might be possible that you need to pay tax on that income which is not real. Last note, if a house property is owned by 2 or more person, we call them co-owners or joint owner case. Then such person are known as co-owners. The computation will be in normal manner except that in case of house property for self-occupied, then interest deduction can be claimed by them separately rupees 30,000 or 2 lakh rupees as the case may be. For example, we said that if there is a house and you took a loan and the interest is 4 lakh rupees, then you can only claim maximum 2 lakh rupees as the interest. But if you technically own that house with someone else also, that means there is a 2 owner of that house. In the registry, there are 2 owners. Then in that case, if the interest value is 4 lakh on that house, then 2 lakh rupees each can be claimed by each owner. So there can be a tax planning that if I am going to buy a house and interest is 4 lakh, then I'll prefer to buy with it my friend or my relative or my brother or someone who has his own income. Then we can claim deduction 2 lakh separately. That 2 lakh rupees deduction is per person, not per house. So if the house having 6 lakh rupees interest, and if the property registry name in 3 name equally, then each of them can claim 2 lakh rupees interest deduction in their personal returns. So that is the case of tax planning. Now we are moving on to our study material questions one by one. We discuss this question. Then let's see the other questions. Illustration number 2, page number 4.136. This is very simple. Rajesh, a British national, a resident and ordinary. First of all, just you should focus on one thing, which case it belongs. A British resident, we have discussed this already, I guess. This is the case where, okay, property is outside India case. So we just discussed it, I guess, or if not, yeah, we have discussed it. Okay, I remember. Okay. Moving on to other question. This is question illustration number 3 on page number 138. Okay, Mr. Manas owns 2 house property, one at Bombay where his family reside and the other at Delhi, okay, which is unoccupied. So one is family using and one is unoccupied. He lives in Chandigarh for his employment purpose in a rented house. Very good. For acquisition of house property at Bombay, he has taken a loan of 30 lakh at 10% per annum on 1/4/21. He has not repaid any amount so far. In respect of house property at Delhi, he has taken a loan of 5 lakh at 11% per annum on 1st October 21 towards repairs. Again, remember, in case of repairs, we can only claim maximum 30,000 deduction. Compute the deduction available to him under section 24B. So technically, they are not asking us to calculate annual value. This is asking us to calculate the interest value. So interest, I have already discussed with you that how to calculate current year and PPI interest. So this question, I guess you can solve it by yourself. Just remember, 30 lakh rupees, 10%, that is 3 lakh rupees current year interest, and the 55,000 interest is for repair. But for repair, it cannot exceed 30,000. Total interest is 230, but for both houses, maximum deduction of interest can be claimed, that is rupees 2 lakh. That is a very simple question regarding interest. You can solve it by yourself. I am moving on for some numericals, which is on page number 141, illustration number 4. Okay. Anirudh has a property whose municipal valuation is 130 per annum. The fair rent is 110, very good. And the standard rent fixed by the Rent Control Act is 120. So everything will be given in question. The property was let out for a rent of 11,000 per month throughout the previous year. Unrealized rent was 11,000 and all conditions prescribed by rule number 4. Those conditions on which you can claim unrealized rent deduction are satisfied. He paid municipal taxes 10% of municipal valuation. If in the question it has been not given, it has only been given that he paid municipal taxes 10%. Of municipal valuation is not given. Still, always calculate municipal tax percentage on municipal value. In this question, it has been given. But if it is only given the percentage of municipal taxes, apply those percentage only on municipal value, always. Interest on borrowed capital was 40,000 has been given. So kindly tell me first, which case is this? You will see, if you'll find the correct case, you will solve it like this. So I am waiting for your answer. Read the question and let me know which case is this. So we will solve it with the help of that case scenario. Baranti is saying I did not get fair rent calculation if not given. If fair rent is not given in question, then actual rent must be given in question. And on the basis of that actual rent multiplied by 12, that will be your fair rent. Okay, somebody is asking, Antilla is count as one house only. It will be treated as one house or two house. It will depend upon the property number. If your house number is 10, then the floor does not matter. They will be treated as single house. So I don't know Antilla has how much house number has been included. So on the basis of registry, we can say if there are 4 different plots on which one building has been framed, then it will be treated as 4 houses, not a single building. So that will depend upon different case. What happened after 2 years? After 2 years, who is asking? Krishna is asking what will happen after 2 years. So if builder was not able to sold those houses after 2 years, then from the 3rd year, they all be treated as deemed let out. And whatever the rental value will come, builder need to pay tax out of his pocket. That is going to be a huge amount of tax for him. Okay, Anand Bekar ji keh rahe hain, Mr. Ankit, this seems very anti-business. You are penalizing builder for building more and helping to improve the state of the economy. Government actually giving 2 years time, actually more than 2 years time to sell that property. So they should build the property as per demand. If they are building a property without demand, without customers, so they need to pay tax on that, of course. So can PPI interest be claimed as deduction by SEC even he sold the house property before using full PPI interest of 5 years? How it's possible? If you are not the owner of some house, then you are not the owner or not the deemed owner. For example, after 4 years, you sold that property. In the 5th year, you are not the owner of that house. So there will be no income from house property concept will applicable for that house. So that PPI might be lost. You cannot claim that benefit. Krishna is asking, I want to ask those who file ITR taxable person, everyone live in their house as self-occupied. So if they have loan, they will show loss from income from house property, reduce tax liability in practical scenario. This happened, and those whose income is below 2.5 lakh also live in house as self-occupied. They can also file and show loss from house property. Yes, they can claim. If you have loan, then you can claim the interest. Now assume why someone will take loan just for the tax benefit. You need to pay interest 10% per annum to the bank, and tax benefit is less than that, very less than that. If you are paying 1 lakh rupees interest, that is technically your loss, actually your expense. And you are saving tax on that 1 lakh rupees with a slab rate of might be 20,000 or 10,000 or 30,000. So that is not an intelligent case. So the loss can be claimed even if your cases, but technically it will not going to give you any benefit if you are only taking a loan to get the benefit. You should understand you need to pay interest also. So that is your expense. So what is the fun of paying 1 lakh rupees to just save the tax of 20,000 rupees? Okay, Mr. Krishna. Okay, answer is coming. Sapna is saying case number E. Correct. The case is case E because there is unrealized rent also. So how we will solve it? We will solve it very simply. If we'll know that there is case number E, then we need to take municipal value and fair rent. Whichever is higher, of course, 1,30,000, as you can see. 120 is the rent as per Student Rent Act. So this is 1,20,000. Case E said just compare it with actual rent received. So total rent was 11,000 per month. So for the full year, it will be 1,32,000. And 1 month rent was unrealized, 11,000 rupees. So that will be 1,21,000. Whichever is higher is 121. Your question has been solved. That's it. Finish. 121 will be your GAV. You can see that. And then you can deduct 30% municipal taxes, then 30% of NAV, and 40,000 has been given as interest. So correct answer is 35,600. You can deduct as 11,000 out of GAV also. That is an alternative view, but I'll recommend please follow this view what we have already discussed. Always taken only actual rent received. Always taken after unrealized rent, the value for comparison with standard rent. Okay, solved it. It's this simple. You can see, and these kind of question comes in examination for 5 marks or 6 marks, generally. Okay, next question, illustration number 5. Ganesh has a property whose municipal valuation is 250. The fair rent is 2 lakh per annum, and the standard rent fixed by the Rent Control Act is 210. The property let out for a rent of 20,000 per month. However, the tenant vacated the property on 31st January 23. That means after 10 months. He vacated. Unrealized rent was 20,000 and all condition by rule number 4 has been satisfied. He paid municipal taxes 8% of municipal value, interest on borrowed capital 65,000 for the year. Compute the income from house property. Now, which case is this? Send me your answer quickly. Which case is this? Renu Kumari is saying Casey, Miss Sheikh Baisurin give the correct answer. Very good. So which case is this? You can see it was let out and vacated by the tenant. So that is the case of case number F, where the property has been let out and vacant also. Unrealized rent was also there, but you can see he vacated the property and it has not been said that it has been self-occupied. So there is a 10 months let out, 2-month vacancy, and there is unrealized rent also. So now we are talking about our case number F. So to solve case number F, I need to open that sheet. And you can see how easy is this if we follow the provision. It was given Ganesh has a property, municipal valuation is 250. Fair rent was 2 lakh. Then whichever is higher is 250. Then standard rent has been given in question 2,10,000. So whichever is lower, that is 210. Now we will move on to our case number F scenario. We need to take annual rent. We need to take 12-month rent. The rent of per month was 20,000. So that will be 2,40,000. You need not to do anything. Is there any unrealized rent? Answer is yes. Deduct it from over here. So there will be 220. Is there any self-occupied property time period? No. So this 220 is going to be compared with this 210. Now whichever is higher is 220, sorry. And because this value comes higher, so now we can deduct our vacancy time period, and vacancy for 2 months from February and March. So 20,000 was per month rent, 2-month vacancy, that is 40,000. So 180 will be my GAV. It's as simple as that. That's the power of format. If you find now this is case number F, so now you are clear what I need to do. So there will be no confusion that what I need to do. You know how to solve it. It is this simple, students, this simple. Okay. So where was a question? Sorry. Okay, over here. You can see the comparison. So do not get confused. It's very simple. The GAV will be over 1,80,000. Direct the municipal taxes, 30%, and interest has been given in question. You can solve it by yourself. Next again, illustration number 6. House property numericals has a very beautiful characteristics. That the question is very huge. You can see the whole paragraph. How huge it is. And you need to solve it in like 3 or 4 points. Just you need to write the GAV, that's it, and simply solve. If this paragraph much question belongs to salary, then you can imagine how long the solution is. But the house property, its paragraph, you can see 1, 2, 3, 4, 5, 6, 7, 8, 9 lines paragraph and question is there. And we will going to solve it like 4 and 3 lines only. It is very simple. So you will tell me the case. I'll read it for you. Purna has one house property at Indranagar in Bangalore. She stay with her family in the house. Okay, the rent of similar property in neighborhood is 25,000 per month. The municipal valuation is 280. Municipal taxes is 8,000. The construction began in April 16 with a loan of 20 lakh taken from SBI housing loan from 1/4/2016. The construction was completed on 30th 11/18. I've told you if this is date is 31st March 18, then we need not to calculate PPI, but this is 30th 11/18. So PPI will also be calculated. Accumulated interest has been given in question 360. That means PPI isn't given in question. Total PPI is 360. You can divide by 5 to get the current year PPI. On 31st March 23, Purna paid 240, which was include 180 as interest. So 240 has been paid. 1,80,000 belongs to interest. There was no principal repayment prior to this date. Compute Purna's income from house property. So I'm going to calculate GAV, then interest calculation you can done yourself. Okay. So Purna has one house property in Indranagar, Bangalore. She stay with his family. I guess it's a self-occupied case. So there is no need to calculate the GAV. Yes, this is the calculate case. Nil, you just need to calculate the interest. It has been given that 180 belongs to current year interest and 72,000 is PPI. So 252 is the total interest what she paid, and maximum limit is 2 lakh rupees. So you do not need to solve further. The 2 lakh rupees is technically the loss which belongs to house property in her case. It has been let out also something. Okay, no let out. Next question is illustration 6 we did. Now illustration number 7. So I guess now illustrations are very simple for you because case number F is difficult only. You can go through it by yourself. I need to take some salary illustration also. Somebody is asking me the salary illustration. And we have our MCQ test also pending. So that I will upload on the portal. You can solve it by yourself and the answer will be there. So if I will have some time, I will explain the MCQ right now. Otherwise, you can download the provision from the portal. Let me see somebody is asking me salary question again and again. You can send me your salary queries now. Let me see. Somebody asked what was illustration number 5. Somebody was asking where it was. Who was asking? Where is that query? Which illustration it was? Illustration 5, somebody asked, I guess. Might be, yes, illustration. Question 5 of module 7525. Okay, fine. If anybody wants to ask any query regarding the salary, you can ask me. Please send me the question number also. Sorry, page number also. So I'll find the question directly from there. Illustration 5, somebody was asking. I have 1, 2, 3, and the last sheet is this. Illustration 5. What was in illustration 5? We have discussed it. Who is asking illustration number 5 from me? It's a gratuity case question. If somebody is asking illustration 5 from gratuity, who is asking? Practical question 4.123. Okay, that is for this. Four point 123. $4.100. You are asking about salary 4.123, page 4.169. Okay, just wait. Practical question 5. Let me see. One, 3. Page number 1.15. Okay, what you want to ask? Who was asking? Page number Mr. Kojima. You cannot ask the full question. Ask me the query, point number 1, 2, 3, whatever you want to ask, because if I'll take this whole question, that will take a lot of time and what we do not have. So if you have any query regarding it, then you can ask me. You might have the query regarding the Mr. X is a regular employee of Rama and Company. He was appointed on 1st January 2220. Okay, fine. This is like, so now everyone can see technically this question number 5 has been asked by someone and might be you have an issue. This range questions, fine. So if in the question, the range has been given, salary has been given in the range level, like in this question, he was appointed on 1st January 2022 in the scale of 20,000 1,000 30,000. What does it mean? It means the day he or she will be appointed, the salary will be 20,000 per month. Listen it carefully. If the range salaries has been given in range question, and -1,000 means after exactly 1 year, your salary will be increased by 1,000 rupees. So from 1st January 2022, you are getting 20,000 rupees per month, but after exactly 1 year, that means from 1st January 2023, you will get now 21,000 per month as your salary till it will reach 30,000 per month. So after 1 year, it will be 22,000. And after 1 year, it will be 23. So this scale will be increased up to your salary per month will be up to 30,000 per month. After it, it will remain 30,000. So in this question, it has been given that the scale was from 1st January 2022 was 20,000 dash 1,000 dash 30,000. So that means after 1 year, that means from 1st January 23, now he or she will receive 21,000 per month. And for our previous year, that is previous year 22-23, we need to see how much basic salary will be there. So because salary has been 20,000 rupees from 1st January 2020, so from 1st April 2022 till December 22, it will be 20,000 per month. And from January 2020, 1st January 2023, it will be 21,000 per month. So from January till March, it will be 21,000 into 3. And from April till December, it will be 20,000 into 9. So that will constitute our basic salary. Clear? Might be this must be your question. So that is like has been solved. All other points are same, of course. So that's the way you need to calculate the salary, 21,000 for 3 months and 20,000 for 9 months. Clear? Next, somebody is asking me page number 169. So question 5 of house property, page number 169. Let me see what is in page number 169. Just a second, students. Question number 5. Question 5. Two brothers Arun and Bimal are co-owners of a house property with equal share. This one, I guess somebody is asking. The property was constructed during the financial year 98-99. The property consists of 8 identical units and is situated at Cochin. Okay. During the financial year 22-23, each co-owner occupied 1 unit for residence and the balance of 6 units were let out at a rent of 12,000 per month per unit. The municipal value of the property is 9 lakh and the municipal taxes are 20% of municipal value which were paid during the year. The other expenses were as follows. One of the let out unit remained vacant for 4 months during the year. The problem is this, we do not know which one unit remained vacant for 1 month because we do not know. So we need to calculate the whole value as a single unit and then we will divide it between these brothers. How? I will show you. Arun could not occupy his unit for 6 months as he was transferred to Chennai. He does not own any other house. The other income of Mr. Arun and Bimal are 290, 180. Compute the income. So this question will take a lot of time to solve it, of course. How it will be solved? Let me show you. Two brothers Arun and Bimal are co-owners of a house property. I don't have this question. With equal shares. The property was constructed during the financial year. The property consists of 8 identical units and is situated at Cochin. During the financial year 22-23, each co-owners occupied 1 unit for residence and the balance 6 units were let out at a rent of 12,000 per month. So total was 8 identical units, 1 occupied by them and 6 was let out with a rent of 12,000 per month. So what we need to do, first of all, how we will solve it? See, total 8 units were there. Now self-occupied, 1 unit. So annual value will be nil for both Bimal and whatever the name of other person. So annual value will be nil for 1 units. The 6 units were let out. One of which is technically vacant also. And which is vacant, we do not know. So we need to calculate the total value of these 6 units in aggregate and then divided by 1/2 in both of them at the end. So first of all, we need to calculate the value. What is the question was? I did not actually take the print of this question. So now, first of all, you need to see there is rental percentage also. Municipal value 9 lakh rupees for all 8 units. So we need to calculate the municipal value 6 unit only. 20% interest paid for loan taken for construction of house. Why it's 75 and 25%? Because out of 8 units, understand, out of 8 units, 2 is self-occupied, one by one each brother, and 6 are let out. So 75% interest belongs to let out provision and 25% belongs to your self-occupied provision. That's why interest has been divided by 2 by 6. So that's why the interest has been divided like this. Then you can see nil for both, and interest for 25% of total amount will be divided between these brothers. So self-occupied property income was this 30,000 and 30,000. Now we will solve the full 6 units together like this. Gross annual value, municipal value, we will take 75% because total 8 units value was given in question. So 9 lakh was the municipal value for 8 units. So for 6 units, that is technically 75%. It will be 6,75,000. Again, it's an F case because vacancy of which house is not been given. So you need to calculate first of all fair rent, because in this question, fair rent has not been given. Let me write the question for you, then I'll be able to solve it for you. Look, this is 12,000 per month per unit. Municipal value is 9 lakh. Is there any other information has been given? No. So I am going to calculate GAV for you. It's a very good question. See, we are solving 6 units provision. That is 75% of part. Okay. So we will calculate like this. Municipal value is 12 lakh rupees for all units, but for 6 units, that will be 9 lakh rupees. Now in this question, because fair rent has not been given, and if the fair rent has not been given, then we need to calculate it on the basis of actual rent, which was for 6 unit, that will come around 12,000 into 12 into 6. That will be 8,64,000. Then in question, standard rent not given, so we will skip that part, and now we will move on to our annual rent provision. As per annual rent will be same 8.64. There is no vacancy, no unrealized rent. So that will come. Now compare with something I'm missing from the question. 1 month vacancy, it will come around 8,16,000. That is 12,000 into 6 into 12. 8,64,000 and 1 month vacancy. So that will be 675. Okay, I missed it. 9 lakh was a total municipal value. So that is going to be change. It's 6.75. Just wait. So that was 9 lakh municipal, 6.75 lakhs. So you can see whichever is higher is this 8.64 lakh was higher because this value now higher. So we will remove 1 month vacancy for how much month it was? So vacancy was 48,000. That means 4 month vacancy from a house, that is 48,000. This is going to be deducted from this. So remaining will be your now GAV. Now you can solve this question easily because now we have GAV. You need to deduct the municipal taxes. Municipal taxes will also be taken 75%, of course. That need to be deducted. Then after that 30% deduction and the interest of 75%. Whatever value will come, we need to divide equally between 2 brothers. That is 125, 850 in each. And then your answer will be there, of course. I can take MCQ, but I guess time is very short. Let's see what you can do in MCQs. This is the MCQ. So we will do it in 5 minutes. Fine. Then we will shut down the class because our last session. So you can manage for next 5 or 10 minutes. So MCQs are due for interest and the other cases. And the construction of house, let's solve the MCQs of GAV. Okay, give me the answer of expected rent is equal to what? if theoretically I'll ask you what is the expected rent meaning, then how you will explain me the meaning of expected rent? Expected rent is equal to A, B, C, or D. Which is the correct answer? Question number 5. What is the correct answer? Expected rent technically is equal to what? Is it fair rent, municipal valuation, lower of fair rent or municipal valuation, or higher of fair rent or municipal valuation, subject to the maximum of standard rent? Send me your answer fast. The correct answer is D. Well done. Next is, Sajal is the owner of a house property covered under the Rent Control Act. Municipal value is 30,000. Actual rent is 25,000. Fair rent is 36,000 and standard rent is 28,000. What will be the annual value, gross annual value of the property? Send me correct answer. Let me see how many of you are attentive. Question number 6. What should be the correct answer? The correct answer is D. That is 28,000. Well done. Those have sent the correct answer. Very good, Renu. Very good, Nikita. Rohit owns a house property in Delhi which he was to give on rent. He seeks your help to determine the reasonable expected rent when monthly municipal valuation is 2 lakh rupees. Fair rental value is 250 and the standard rent is 2,20,000. The reasonable expected rent will be computed with reference to the following amount per month. Monthly should not be monthly. And municipal value is 2 lakh. Fair rent is 250. Standard rent is 220. You need to tell me the expected rent. What will be the expected rent of that property? Question number 7. What will be the expected rent? Chanchal is giving the answer of 6 questions. 6 we already have discussed. Waiting for answer of 7. Question number 7. Alok is saying A. Then Dhyanesh is saying A. Very well done. High five from Wi-Fi. The correct answer is A. Next is find out the GAV of house property A. The following is given. Municipal value 10,000. Fair rent is 88,000. Standard rent is 92,000 and actual rent is 89,000. So what will be the GAV in this case? Question number 8. Send me the answer of question number 8. What will be the GAV in this case? I need the answer of question number 8. Okay, 7th answer is still coming. Question number 8 answer, Shaikh is saying D. Anyone else? Okay. Pratha Sarthe is saying D. Okay. Bharati Doshi is saying D. Very good. Subhashish is saying D. Very good. Pranjal Nathan is saying B. No, B is not the correct answer. The correct answer is D. D is the correct answer. Okay. So question number 8 correct answer is D. 89,000. Well done. Next is question number 9. X is the owner of house which has been let out on a monthly rent of 25,000. The fair rent 290, standard rent is 260, the municipal value of the house is 280, and the municipal taxes are levied at 10% of the municipal value. The entire amount of municipal taxes are outstanding for the year ended on 31st March. It should be 22. The amount of municipal taxes are to be allowed as deduction for computing the annual value will be. I'm just asking the amount of municipal taxes allowed as deduction. You need not to calculate GAV. You need not to calculate annual value. You just need to tell me the amount of municipal tax are to be allowed as deduction for question number 9. Question number 9, somebody is saying, Ojema is saying D. 8th answer is coming. Very good. Palok is saying D. Chanchal is saying 9th answer is A. No, very bad. Subhashish is saying D. Very well done. Alok is saying D. Very well done. Pratima is saying D. Very good. Because the municipal taxes are outstanding, we have studied that it should be paid. So because they are outstanding, so technically there will be no reduction allowed in respect of municipal taxes. The last question, when the house property is let out throughout the year for a monthly rent of 22,000 and municipal taxes paid for current year is 24,000. And for the earlier year paid now is 16,000. The income from house property would be. So you need to calculate the GAV and then calculate the municipal taxes and then deduct the 30% and then tell me the answer. What is the correct answer for question number 10? Total municipal taxes paid for this year is, in this year is 24,000 as well as 16,000. So I'm waiting for the answer of question number 10 because this is the real question. Other questions are very simple because you just need to calculate the GAV. That is a too simple thing for now. Question number 10, correct answer. Let me see. Somebody is saying 2 lakh D option. Miss Shaikh Bashirun. No, the correct answer is not D, something else. You need to calculate income from house property. You need to deduct the 30% deduction also. Then you will reach at the correct answer. Because nothing is given in question, so the GAV will be 22,000 into 12. That is a simple thing. Now, after GAV, you need to deduct the municipal taxes, 30% deduction. Then you will find the correct answer. Okay. Subhashish is saying B. Pranav is saying D. Alok is saying B. Pradeep Kumar is saying D. Renu Kumari Singh is saying D. Gomti is saying A. Okay. The correct answer is B. 22,000 into 12 will be your GAV and full municipal taxes is going to be deducted. Full. Because municipal taxes paid is the main word. So whether it's paid for this year or last year, if current year it has been paid, then full municipal taxes 40,000 need to be deducted. After that, there will be annual value. You need to deduct 30% of annual value, and then your answer 156800 will arrive. So we have done the MCQs also. I'll upload this MCQ solutions today only, and chart has also been uploaded by me yesterday. So kindly refer the chart also. It will really going to help you to see that how we need to solve provision. This is the chart I uploaded. All the cases, all the basic provision has been shown in this diagram. So please go through it. And as I always say, please study hard as much as you can, because your study is the most important thing. You should not compromise your studies. So see you again, might be. So this is my last session, and I hope you enjoyed it very well. All the best for your future. And please remember one thing, what I always say, and I always make you to remember also. Please, this is the thing I need to convey with you. Please revise twice. That's my advice to make you wise. Do not forget it. It's very, very, very important. Okay. So with this, all the best. Take care, and might be see you soon somewhere again. Mr. Ashok, session is